This is FinTech Futures at FinovateFall, and I'm joined by Mary Joseph of Citi. Mary, thank you so much for taking the time out to speak to us today. To get started, would you like to quickly let us know a bit more about yourself and your role then at Citi?
Yeah, absolutely. Thank you for having me. My name is Mary. I am part of the strategic investing team at Citi. I focus on strategic investments for our services business, which covers payments, trade finance, and liquidity management services for our top corporate clients.
So you're here today speaking on a panel about the fintech funding landscape. So what would you say the current sentiment is in the space when it comes to fintech funding at the moment? And is there positivity as we look towards the end of the year?
Well, as we all know, fintech funding is down ever since the high that we had in 2021. Unfortunately, the VC market just has not been as bearish about, or bullish, about fintech. We are seeing some improvements within the space, and there is some positivity, but I do still think it's a challenging time. I think, given certain macroeconomic elements, it makes it a little bit more challenging, and we're also seeing a lot of VC funding being diverted to other sectors and technologies. In terms of what I'm looking forward to in fintech, though, I think there's a lot of advancements that are coming within spaces that have historically been neglected. So things like Office of the CEO or CFO, things around compliance. I think those areas are really interesting, and there's spaces where large corporates like Citi are looking to innovate ourselves, and so fintechs that are providing us with that opportunity are the ones that we're looking at investing in and partnering with.
So what funding trends are you seeing in the space at the moment?
Yeah, so I think compliance, as I mentioned, is actually really huge these days. We're seeing a lot within the space of AML, KYC, anything around enhanced data analytics or predictive models that are enabling our compliance teams to be better at what they do, catch things faster, and also be able to kind of determine which actors are bad and which are good with fewer kind of false positives. So that's a space that I'm really excited about. I think that there's going to be a lot of innovation there over the next 2 years or so.
Excellent, excellent. And are there any areas that you feel are being particularly underfunded at the moment that maybe deserve a bit more attention?
Yeah, I think trade finance actually is a huge gap within the market. Obviously, it's a very old space, and it can also be quite complicated. When you're looking at these trade finance contracts for the largest corporates, they're very, very complex, and it's not something that you can automate as easily as, let's say, payments, for instance. And so I think there's a lot to be done there. We're seeing a little bit, but I think there's many opportunities within things around document processing, things around automating the loan agreements, also ways to track data within the transactions as well. So I think there's a lot of opportunity there.
Excellent. So how do you think about fintech investment as a tool to achieve strategic objectives then? Are there any areas or technologies that you're particularly focused on at the moment that you're most excited about?
Yeah, I think there's been a lot of talk about how banks are looking at the build, buy, partner decision. Obviously, we're seeing a lot more partnerships in the market, and also the opportunity to use investments on top of partnerships. Within our services business, we see strategic investment as a way to kind of enhance our strategic partnerships. So for us, our goal is to partner with all of our investees. So our investment objectives are really tied to the advancements we're trying to make with our own products and services in order to provide a better experience for our clients.
Excellent. What tips or advice would you give to budding fintech founders and looking to get started in the current economy and get that initial funding?
Yeah, I think right now investors are really, really focused on companies that have really strong unit economics and are really, really disciplined in terms of their expense. There was a time when startups could kind of spend, and there was always money that was going to come back in. That's not the case right now. So I would say for new founders that are wanting to enter the space, there's definitely a lot to be done. There's definitely a need, but just make sure that you are identifying what your problem is and making sure that there's truly a market there, that it's a problem that customers actually want to pay for, ensuring that your unit economics makes sense, that you're at the most basic level, making more than you're, spending to provide your product or service. And then finally, that you're just being really disciplined with your expenses. This is not the time to, have the shiny new office because you've raised your Series A. Maybe, stay in that co-working space for a little bit,
Yeah, excellent. And I guess once they've got that Series A, like you say there, I mean, what are the challenges there when it comes to, I guess, going to the next level there, and what advice would you give to kind of overcoming those?
Yeah, particularly in fintech, what we tend to see is most startups kind of start off first targeting SMEs or smaller businesses, and then working their way up, or maybe smaller financial institutions, credit unions, before working their way up to corporates. I think that definitely is a great model, because when you're looking at corporate banks, they want to see some traction, they want to see some proof of concept before they're going to be able to work with you. And so really looking at ways that you can kind of get clients quickly, get data quickly, in order to prove that your product works and that customers want it. And then when you're looking at working with large commercial banks, being able to really identify who in the bank actually needs your product. Don't send 1,000 cold emails hoping somebody is going to see it. Most people are going to ignore it, right? So you have to be really, really targeted about figuring out what part of the bank needs this product, and finding those people, connecting with them. And once you get in and you're able to make those relationships, I think it makes it much more easy to sell to those clients.
Excellent. Great. Well, thank you so much again, Mary, for speaking this day. I know you've got to get off to your panel, so I'll let you go, but it's been a pleasure speaking with you, and enjoy the rest of the conference.
Thank you so much.
Thank you.